In an IRS exam, the examiner has to explain the process and your rights. On the EA exam, they love the Taxpayer Bill of Rights themes. You're entitled to professional, courteous treatment, and your tax information is protected by privacy and confidentiality rules. You also have a right to understand what's being asked and why, so you're not guessing what the IRS is doing with your documents. Two rights matter constantly during an exam: representation and appeals. You can represent yourself, or you can have an authorized representative, like an enrolled agent, deal with the examiner. And if you disagree, you can appeal within the IRS and potentially go to court. Exam tip: questions often test that appeals rights exist even when you're still in the exam stage. Now the other side of the coin. The IRS can verify every item on the return. That means income, deductions, credits, anything. The most common way they ask is an Information Document Request, or IDR, on Form 4564. It's basically a written shopping list of what the examiner wants, often with a due date. Your job is to respond with the requested existing records. What do you have to provide? Any documents the IRS requests that exist and are relevant. That can include bank statements, receipts, invoices, and access to bookkeeping files. Yes, even QuickBooks data. On the EA exam, watch the wording. The IRS can request records and access, but they're not asking you to invent new paperwork. If you can't find something, you explain and try to substantiate another way. If a taxpayer won't produce records, the examiner decides whether to use summons power. A summons is a legal tool to compel testimony or the production of existing documents. It can go to the taxpayer or to third parties, like banks. Here's the exam trap. A summons can't force someone to create documents that don't already exist, like prepare a tax return. It's about producing what's already there. Marisol is an enrolled agent who has information about possible misconduct involving another tax preparer. What is her responsibility if the IRS Office of Professional Responsibility contacts her? Consider these possibilities. She must provide information and might have to testify. She must provide information but wouldn't have to testify, or she can refuse or choose. Think about it. The correct answer is, she must furnish information about the possible misconduct and may be required to testify in disbarment or suspension proceedings. That's Circular 230. A tempting wrong choice is the one saying she must provide information but can't be required to testify, because people assume testimony is always optional. Under OPR rules, it may not be. The IRS has authority to issue a summons in all of the following instances, except which one? Requiring a taxpayer to create a tax return when none was filed, preparing a substitute return when none was filed, determining a taxpayer's liability, or collecting an internal revenue tax liability. Which one is the exception? Think about it. The correct answer is requiring a taxpayer to create a tax return when he has not filed one. A summons can compel testimony and production of existing records, but it can't force someone to create new documents that don't exist. The tempting wrong answer is the substitute return option, because it sounds like creating a return, but the IRS can prepare an SFR using information it can obtain.